Hello, everyone. It was a pretty vicious sell-off overall for the stock market. I threw up the Russell 2000 chart first because the Russell 2000 is hitting a new 2015 low, crashing right through those August lows, down 2.87% today. Very, very ugly. Volume was very heavy. But thanks to biotech stocks, you can see volume was very big on the XBI, very big on the, well, BIB, but I think I'm looking for IBB. There we go. And just look at the volume. So whenever you look at a volume surge like that, a lot of people like to think that, oh my God, the thing's gonna, break down. But I would keep an eye for a bounce here. If we don't get a bounce and we do continue to sell off, my God, things could really get ugly if that's the case, if we don't see any relief bounce on Tuesday. But there's some indications here. So, I'm going to go back to the Russell 2000 really quick before I move on. But the IBB, you can see that TSV is hitting new lows, so it's being confirmed here. But you can see MACD has higher highs. That's technically kind of positive divergence overall. But don't forget, at the same time, if this thing gets really ugly, it could mean that we're nowhere near oversold. And just based on how we traded today, if we trade like that going into oversold territory, obviously you can put two and two together. It could get extremely ugly. And you can look at the stochastics on RSI. Neither one are confirming this move down to these lows here by hitting new lows. So, it could we could either be looking at a bounce because we got positive divergence, or it could get extremely ugly. And that's basically my takeaway from that and the Russell 2000. Russell 2000, you can see here, TSV and MACD nowhere near oversold. So it's not like, they're testing. So that could be, positive divergence, and we could see a bounce, but I doubt it for a bottom, but still. Or it could also mean that things are about to get really ugly, and you can see RSI, stochastics, similar situation. And on a weekly, wanted to show you that the stochastics are getting oversold, so that's good. So that's why it could be a bounce here. But if we go out to a monthly, the exact opposite. The monthly looks like it's just now starting to roll over. And so, like I said, if we get really, really ugly, I don't see why we couldn't test the 2011 lows. I just it seems like the most plausible next area of support overall for the market. But, that's extrapolating into the future, my own opinions, but that's what the market can do. Oh, the other thing the market could do is just keep going sideways, forever, and we could keep getting churned out with signals. But once again, new signals would be small, and cutting our losses is, something that we just do, and we're going to raise stops and everything. So, like, for instance, let's go over 50% sells today, like HCKT. So the final sell stop on the position, today's low a day. EPAM's a 50% sell, the final sell stop now, today's low a day. ICUI, today's low a day. So these are all 50% sells, but today's low a day because of the way that the market has broken down, like ANAC. That's it. If they move below that with any position that you guys have on, if I still have any of these on, which I believe I do, of course, obviously, they gotta go. So right now I'm tracking 30 stocks on an end-of-day basis. There's 30 long positions I'm tracking on an end-of-day basis. I currently have 20 in my portfolios, which means 10 stocks I'm tracking on an end-of-day basis I've already been cut out of. For instance, LHCG. I think I'm all out of that one. So LHCG, full sell if it moves below today's low a day. SKX, long-term winner, but everything's getting really ugly out there, and it looks like it's just one of the final horsemen to now die. So today's low a day. AMSG, today's low a day. DXCM, today's low a day. And APLE, which is a newer long position, that isn't a change. That is actually just a legitimate 50% sell signal. The final sell stop on this one will remain below 1835. So if it hits 1834, I will be out. Now for full sells, DHIL, done. TILE, long-term winner, done. G, new long, done. Fix, long-term winner, done. But it's lower volume, below average volume. Doesn't matter. Look at the technical pattern. Clear rollover. This is unlike any pullback you see in this chart. This is a rollover. This is like going up the hill and going down the hill. This is not a good pattern. So FIX is a full sell. NCLH, new long. Thank God for sell stops, full sell. Tree, second, close below the 50-day moving average on above average volume without the stock being up 100%. So up here, it got up to being 125%, but to prevent from being a full sell, it would at least need to be up 50%. And as you can see, it fails that, but I would need to see it up much higher. In today's market condition, it would need to be up 100% from the buy signal to today's close. So TREE is a full sell. SCAI, thank God for sell stops. Told you they're going to pay off here in a minute. A few months ago, somebody was suggesting I over-optimize my stops, and I was letting them know that over-optimization kills systems and leads to big drawdowns. And this is proof right here with the market that we're seeing. Our IRMD, completely disappointing. I unfortunately moved my final sell stops to below 925's low day, 2570, so I could at least lock in a little bit of gains. Damn it, it gapped down today, so very disappointing. Final sell stop executed basically with me with a loss now because I got long at 24.75 and my sell stop would have gotten lost 24.25. So damn. Once again though, what do you expect in a market like this? And then ADPT, second close below the 50-day moving average on huge volume. Once again, from the long signal to now, it's not even up 50%, much less 100%, so it's a full sell. But once again, new long signals, old long signals, they're all being taken out now, 50% sells. Most of these I'm already out of, but the ones I'm not out of, like I said, if they're still on the books, today's low a day is the final sell stop level, and they're gone. I believe all of the final sells that I got today knocked me out of every single one. So every single full 100% sell stop signal that I just posted, I was knocked out of them all. Now, were there any nice stocks today? Yeah, but guess where they're at? So RAI, this is by far the best looking technical pattern in all my scans tonight. And we all know Reynolds America, it's a tobacco cigarette stock. But look at Mo and look at Philip Morris. So it's not like that there's a full confirmation in this. It's just RAI. So kind of interesting. But a tobacco stock, and then surprisingly, earnings season is coming up. Alcoa. I don't even know if they announced earnings today. I already shut down my MarketSmith, so I don't even know if this move was related to earnings or not. It seems Monday. It seems like it would be. But no matter the case, I don't care because Alcoa is not a stock I trade. That's why I don't know anything about it, and I don't follow the news, CNBC, because I'm not insane. So I don't need to do that kind of stuff. But Alcoa, pocket pivot point signal above the 50-day moving average on huge volume green bop. That's a nice pattern. Nothing I'd want to buy, especially when I look at an arithmetic chart pattern. Look at all that overhead resistance going all the way back to the November highs. I mean, that's ridiculous. That is a stock, no interest in buying. But that was it. Absolutely it. There are no long signals, no short signals. All the ETFs are too extended. And I had a conversation with somebody on StockTwits who wanted to go long BIS, or I think it was LABD. And they were going to put their limits at 47 and 37. And I was like, yeah, fine, as long as you have a cut loss plan, whatever, do what you ever do. But I would not take the trade. Super risky, super extended. The chances of it failing are 75%, chances of it succeeding 25% based on historical data of buying extended stocks. And then even if we get the case, we could get a huge reversal higher tomorrow that could wipe out all the gains in one day because you are buying an extended long. Well, it worked today, but it goes to the case that a bad trade can make you money. A good trade can lose you money. It doesn't change the fact that the former is still a bad trade and the latter is still a good trade. Over time, if you continue to do that bad trade that made you money that one time, you are going to lose your money. If you continue to do good trades that lose you a little bit of money, in time the good trades will work and pay off tenfold what you lose, as long as you're cutting your losses fast. And that's why right now, most of these losses, all these new long positions, do they add up? Yes. Do they hurt? Do they cut into the profits of the hedges? Yes. Should my hedges be bigger here? Yes. But all the gap ups or gap downs in the market prevented that from happening. There is nothing I can do. It just nothing lined up perfectly. If it would have, instead of being right around a 15% short with 3 times leverage, putting us at 40% short, we'd probably be 20-25% short with massive leverage, and then we'd have 5% long positions like I currently do now, and then the rest would be in cash. But all the gapping around in this market, all the volatility from whenever we would get an initial signal to the next day, there is nothing I can do about that. I can't change things that have already happened, so you just got to go with it and stick with the plan. Overall, though, today was very ugly. As I showed you, they're nowhere near oversold conditions, so we could easily continue to sell off. I was only thinking of the Russell 2000 being in positive divergence, but you can see the NASDAQ and the S&P 500 still have not hit new lows, and so the positive divergence until it happens, until we hit new lows, it doesn't really exist. But the same thing can be said. If we're going to get very oversold, it's going to get extremely ugly. if we're going to reverse and bounce here, I don't see how we have that far to go on the upside. Cash is definitely king.